Yo, what's going on, believers? Happy Saturday. I'm actually going to do a review of this past week. I guess a mid-month review, if you will, and another outlook for going into the rest of the month. Possibly going to update the outlook on Monday or Tuesday once the market opens, right? And I get that information because the open could open with a gap in a lot of different markets, and so that will definitely be influential in my analysis. But as far as the format of this is going to be, I actually want to reference the video from last week that I posted with my outlook for the past week, right, and for the month and as a whole. So I'm actually going to be back and forth between the charts, right, and that video. So I'm actually going to go over to the video now and play this portion of it here. As you can see real quick first though, so the week closed yesterday. So this is the monthly candle look right now. And so that I don't have to come back to the monthly, I just want to talk about this real quick, right? So what I do have annotated, which I didn't have in the video, is the high for May, because it's a swing high. I've mentioned swing highs before. So May was a swing high, as well as March. March sitting just below this imbalance though. So as it closed above that high and closed inside of the imbalance last month, what I was looking for this past week, based on where price was on the monthly chart, right, before last week actually was done, it had not yet reached back lower to the low end of the imbalance or digging into any old levels, like for example the March high. But I was talking about how I wouldn't be surprised if it does come down to retest the low of the imbalance or this high, which are essentially the same level. They're not exactly, but they're so close that I was saying that they're pretty much the same thing. So I won't really annotate this. That's why I wasn't annotated. I didn't annotate this because it's essentially the same level as the low of the imbalance. And I felt like if it was to dig all the way down to the March high, that it could possibly be setting up for a bearish month, which is not what I'm anticipating for the dollar for the month of October. So with that being said, I just want to drop down to the weekly now over here, and just so you can see, so the drawn liquidity, which you'll hear me talk about in the video, was last week's low for the dollar. And why I've mentioned also before that to keep this simple, when I have my drawn liquidity, I'm not concerned with where price closes. It's just about, did it reach there? And so because it reached there, but as you can see, by the time the week ended, it had rejected, right, from closing below that low, flipped bullish, and we end up closing within, right, this upper portion of the wick of the week before that candle. And so going into next week, my real simple, right, drawn liquidity for the weekly is for it to take out this, previous week's high, right, which fits the narrative, right, for a bullish dollar. And of course, just because I'm already I'm a big fan of October, and I feel like this will be some really good opportunity for anybody that is tuned in. As I'm getting better at explaining everything, it is a good opportunity to really be able to solidify some of the things that I use, why I use them, and whatnot. So another thing I'm taking note of is between this candle's high here and this candle's low here, right, there is a gap in between them, right, and another imbalance essentially. So I could also frame this as a drop down into, right, that imbalance, right, and reject it higher, signaling for, right, continuation higher. So but now let's go to the video clip.
Right, so this was actually the first time where a previous week's low was the drawn liquidity for dollar. And so that is actually what the drawn liquidity is for me, just keeping it simple, right? Took out this high and then closed back within that range as a bearish candle. So to me, I'm interested in seeing this low being taken out. Point blank, period.
All right. And so as you can see there, boom, the drawn liquidity last week was that low being taken out. As I mentioned already, it did not stay below that low, but that wasn't the point, right? That was just simply the drawn liquidity. Now, as you see, I dropped down to the daily over there. Let me see if there's anything I want to mention from over here about the daily. Okay, perfect. Yes, there is. So another thing that lined up with that, so this level here, as you can see at the bottom, it says Friday, right? 06 October 23. So that's Friday, October 6, 2023. This was the low, right, of that previous week prior to last week. And Monday wasn't able to get it. And that's what I mentioned also in the video, which I may skip that part. No, I'll play it. But I mentioned that now with Monday closing, because it was around the time that Monday was about to close for the dollar that I posted that, that with it not taking out this low, but it's still closing bearish, that this low would then technically become the drawn liquidity for the next day, but not forgetting, right, that this is still that drawn liquidity from the weekly perspective. So this day is low as also the week's low, and it's still a drawn liquidity along with this low. And then on Tuesday, we got the delivery below both of those lows and failed to get to this low, right, which is there's another swing low here on the daily chart. So this sell stops resting below there, right? Failed to get there here. But then on Wednesday, it did trade down there, but look at how it closed, right? It rejected. So what am I looking for here? I wanted to see Wednesday's high taken out. Thursday very aggressively did that. And then in similar fashion, right, we'll be looking for Friday's high. For Thursday's high on Friday. Friday accomplished that. Now going into next week, Monday, I'm looking for Friday's high to be taken out, which is not the high of the week, right? Because, which is also the high of the week. So again, fit the narrative for higher prices in dollar. Another thing I know that I'm going to mention in that recording is that as it's trading down, is possibly seeking sell side liquidity, right, to pair buys with, to then, right, move the market back up.
Drop it down to the daily chart, right? So from the daily perspective, now along that weekly, there were no weekly, right, draws on liquidity of the previous week's low, but there were draws on liquidity toward previous day's lows that were never hit during that nice sustained rally, right, that dollar just went through the past 3 months. So in similar fashion with last week's low, right, being that draw on liquidity, since the dollar hasn't officially closed yet for the day, and because based on the structure of the daily and how last week ended, Friday's low is actually, from the daily perspective, the drawn liquidity. Like I said, the dollar chart actually closes for the day here in a couple of minutes, so most likely not going to reach this. The drawn liquidity did because of this. It actually still is bearish, but now basically the low of today, which is about to be solidified in a few minutes, will then become the drawn liquidity for tomorrow, technically when the dollar reopens around maybe about like 6:45 or something like that, when Century Time, when the dollar's going to reopen. So upon that reopening and a new, right, daily candle starting to print, then the low of basically Monday, right, because Monday was technically did yesterday in the trading world, the way the trading hours per day work. So then this would be the drawn liquidity, right? But long story short, lower prices for dollar until it takes out these two previous days lows. Also, what this is doing is confirming Friday as a swing low, right? It's got a low with a higher low to the left and a higher low to the right.
There's your swing low
which is
explanation once again.
But what it also is doing is it's also solidifying, validating, making official, right, a swing high as well.
And there's your swing high confirmation or explanation. Got both of them right there. If you've forgotten or hadn't seen those videos where I already explained what a swing high and swing low are, that one candle was able to explain both of them.
I'm going to be looking for, like I said, Friday's low and Monday's low once Monday closes in a few minutes. So that is the dollar chart. Now going to the indices, NASDAQ SPX are going to be very similar.
All right, so I'm going to pause this again. And another thing I just want to mention before I go to the indices on the charts here to see what ended up happening, right? As you can see, this is what the monthly would look like on NASDAQ before last week closed. But before I go there, I just want to mention something I've mentioned plenty of times before, right? The way that I do my analysis, the way that I use the dollar, and the way that ICT has taught me to use the dollar is to use it as a barometer. There's some phrases that you can look up on Google, Investopedia, whatever, called risk on and risk off. Risk on is conditions where the dollar is bearish, moving lower, so the yield that an investor would get from investing in dollar is going down, and so they're going to want to put their money elsewhere. The other assets where they can place their money and get profit are considered risk assets, like stocks, like gold, commodities, things like that, right? So how it works is risk on means bearish dollar, so lower prices in dollar, and more likely than not higher prices in those other risk assets. And then vice versa, risk off is higher prices in dollar, so bullish dollar, and lower prices expected in those other risk assets, because investors are able to get good yield, right, good return on their investment for investing in dollar because the price is going up. And so from that standpoint, that logic, right, on the higher time frame, I'm looking for that signature, whereas I want to see, for example, dollar, which has been extremely bullish for 3 straight months, comes into a situation where it starts to retrace. There is that first down close weekly candle here, the draw on liquidity being that low, tagged, right, rejects higher. So when I'm seeing all of that, that's showing me the dollar's still bullish, right? If dollar's still bullish, at least short term right now, then with the indices, I'm looking for the same thing. Well, I'm looking for the opposite, right? So then I'm looking for bearish indices. And now one thing I do want to highlight, I've mentioned this already before in the last video, was how September's low was not yet taken out in NASDAQ. But, right, ES, SPX, it did. YM, Dow Jones, US 30, it did. So if lower prices are going to continue in the indices, I'm definitely going to be very interested in seeing if I can get something in NASDAQ targeting, right, that September low. And the main thing, right, again, from the monthly that I mentioned in the video, basically is just that this monthly inefficiency here, potentially an inversion, fair value gap, is the main area of concern to me on the monthly chart. Drop it down to the weekly. So the cool thing here is, and let me just go to the video. Oh, actually, no, this is not the video. That's something that's extra. That's my intraday markups right there. But let's go and find, if we can, when I drop down to the weekly over here. And we'll start with that, because I just told you the monthly thing that I said already. As you can see, that's the only thing that's identified on here. And the new annotation that I've added is just that September low. So the monthly still looks exactly the same. I'm just trying to get to, all right, there we go. So I've dropped to the weekly here. Let's see.
Last week's high.
All right, so boom, let's see. What am I talking about?
So given the structure and price delivery and everything like that, how last week closed, drawn liquidity coming into this week was actually last week's high. So NASDAQ has since opened already, done a lot of movement.
So drawn liquidity for last week was the previous week's high, and it had gotten there early.
But that price point from last week's high is going to be a very sensitive area for me for the whole rest of this week. Drop it down to the daily. Now it's
all right, and now I'm going to let this part play, then I'll go to the daily in the live charts now.
As far as, again, the daily structure and how price was delivered last week coming into this week, Monday drawn liquidity with Friday's high, was able to engage with that liquidity, close above it. Now going into Tuesday, which is, as you can see, the new daily candle has already started for the indices an hour ago. The drawn liquidity for today is Monday's high, right? So very simple. There's not a lot of points as far as right from where it's at now to getting up into the high. But the cool thing is that that high is a really solid scalp target. As far as prices making its way up there, should have no problem at all hitting that level. The reason why I'm not concerned about necessarily predicting what may happen next is because if it gets up here, engages with this liquidity, and then uses the high end of this monthly inefficiency or something within the area as resistance to then continue lower, right? Then I have to utilize that level. Not that I have to, but it would make sense for me to utilize that level on a lower time frame to see if I'm seeing some sort of pattern basically on a lower time frame that indicates on a lower time frame and provides an entry and a small loss and a couple of targets, right? And that's what I'm going to use that reference point for, as far as having a higher time frame key level or a higher time frame reference point in which I'm using to.
All right, and I just want to just real quick, and I'm gonna wrap this up here where I won't really need to explain any more of the video, because it's pretty much the same thing that I'm looking for across the board. All right, I want to see the indices moving in concert with each other. I want them moving in sync, right? I want to see them doing the same thing more often than not on the smaller time frames too. And then from the higher time frame perspective, overall, I want to see them doing the opposite of what the dollar is doing, right? So those are the conditions that are high probability for me. All the indices moving together on the lower time frames up to the higher time frames, and then on the higher time frames for whatever the indices are doing to be opposite of what the dollar is doing, right? Those are high probability conditions for me as an index futures analyst. So going back to the charts, since we've already talked about that, I didn't really talk about this level up here on the weekly, but as you notice, when I drop down to the daily, you see this price point over here, 15,461. That's what this week's high was, right? I'm a big fan of higher time frame levels, right? Monthly highs, monthly lows, weekly highs, weekly lows, daily highs, daily lows, right? And midpoints of ranges, of any range, to be honest. So I'm a huge fan of all those areas as highly sensitive areas where I can expect some sort of reaction that's tradable. And so from the weekly perspective, seeing how the week before last week, right, the high was drawn liquidity, look at how it got there by Monday, right? And then going into the rest of the week, it took out another previous week's high, right? And then it rejected from that high all the way back inside of this candle. So technically from a body standpoint, right, there's an inside bar here. So now going to the daily, let's talk about that, and then we'll scan the other ones, and then we'll get up out of here. But so look at this on the daily, right? And if you go back and watch that last video, or if you just, rewind this one a little bit, you'll notice that these lines up here, these orange ones here, right, these were blue at first, signifying that they were draws on liquidity for me. Now these other gray lines wasn't here, nor was this GAN box measuring out this range from this swing high to this swing low, but they're here now, right? Because I saw fit to add them to my chart. But the most important thing I want to reference is when I click on this orange line here, the higher one, if you look over to the right, 15,461, the exact same price of that white arrow signifying that weekly high. And then when as I hover over this candle, what you'll see is this is actually at the bottom there. It says Monday, September 18, 2023. Monday is that first daily candle, right, of a week that prints. So if the Monday candle is the high, then that means that Monday was a high of the week. Well, meaning that if Monday's high is higher than Tuesday, Wednesday, Thursday, and Friday, right, then by default Monday was the high of the week, right? So what happens here as far as the daily is concerned, right? Monday takes out Friday's high, that previous week's high. Tuesday takes out Monday's high. Wednesday takes out Tuesday's high, and then Thursday takes out Wednesday's high, takes out a previous weekly high, right? And also just some more sauce, right? Again, from this swing high to the swing low, it's above the 50%, so it's now in what's considered premium or quote unquote expensive. And so trading up into here, it's allowed from my analytical perspective, right, to drop back down, at least back to the 50%, if not expand through it and seek sell side liquidity or sell stops, right, on the lower half of this range, which is considered discount or quote unquote cheap. Okay, so now looking at the daily perspective, right, as far as NASDAQ is concerned, well, actually, let's go back to the weekly. So, right, previous week's low, this past week's low is the draw on liquidity for me. And I'm also keeping in mind, right, of course, that September low is still nice and juicy, in my opinion. And now coming to the daily, right, seeing how Friday did not make the low of the week, but Friday, as far as structure was concerned on the daily, and how it traded, right, compared to Thursday on my drawn liquidity for Monday is Friday's low, right? And so now just for me to scan the other indices real quick, I'll do that on the weekly. So this is ES, right, the SPX over here. So one thing I really liked about this was, yes, it also, right, had that previous week's high as a drawn liquidity. It reached that early as well by Monday. As you can see, it also was traveling higher into the week, but then rejected lower and closed right back inside the range of this candle from high to low. So my drawn liquidity for next week is going to be this low. And then just to point this out real quick, I didn't do it on the last video. I mentioned how I do it though, which is adding that 25, 50, and 75% level on the Fibonacci to measure out these larger imbalances on a higher time frame. Because as you can see here, it was able to get up above that 25%, not quite able to get to the 50% before rejecting lower, right? And so that's actually a really good sign for bearishness, because it's just showing that it didn't have the strength to even get to the 50% of this imbalance. And so if this imbalance is going to be used to send price lower, the fact that it didn't get to that 50%, now it leaves that open for later on, for when the price does want to run higher and attack buy stops, buy side liquidity. Now there's buy side liquidity here, right? Anybody that was involved in any sales, they're going to have their stop losses here, as well as anybody that's interested in getting into buys. If it's to be rallying back up to this old high, there are going to be people interested in actually buying it when it closes above this high. And so I just like that it left that high right below the 50%, because the 50% of any range is a really highly sensitive area, like I said, and I can expect some sort of reaction, and that reaction could be a rejection after taking out the buy side here and then trading above the 50%, not getting to the 75%, and then rejecting lower. That could 100% happen like that, or it could obviously work its way through that level and continue, maybe even using it as support on some sort of a retest on any time frame, right, and then continuing higher. But again, that's just how this game works, right? Let me look at Dow Jones on the weekly real quick, say my final words for my TED Talk, and then I'll end this recording. So weekly for Dow Jones, YM, US 30, whatever you call it, it's going to be last week's low as well. In very similar fashion, right? The draw for last week was that previous week's high. It got there. There's also an imbalance here. You want to take note of that. If you want to measure it out, if you want to do whatever you need to, but my eyes see it automatically now, so I don't always have to identify them, and plus I don't feel like all of them are as important, they're not all equally important in my opinion. The other conditions, there are factors and conditions that make some more relevant than others. But so just observing, right, price was able to rally into the imbalance above that previous week's high, ends up closing right back inside the range of the candle. So again, drawing liquidity for next week is going to be that previous week's low. And the last thing that I want to mention, like I said, to wrap up my TED Talk, is my goal here. My brain is a very complicated brain. I believe all of ours are, but just I've spent much time trying to understand mine and trying to expand it, right? So I can speak from just my own observations of it. That I'm saying that, not to say that no one else's is, but I can confirm based off of my own investigation that it's complicated. And so I need to simplify things so that I can be efficient. And there's three pillars, right? There's three pillars that I've created, that I've made into a motto for myself, right? A motto that I plan on repeating every trading day multiple times, just until it's like, just until I'm saying it in my sleep, basically, right? But this is it, right? So once I've done my analysis, right, and as you can probably tell if you've been tapping in, right, the dollar and the 3 U.S. stock indices are like the main things I'm going to analyze every day, every week, right? Once I've done my analysis, there are three pillars that I need to focus on. That's it, simply three pillars. The first one, play the probability. I'm doing my analysis to find patterns and conditions that will give me some sort of confidence that one thing is going to happen over the other, meaning that price is going to go up or it's going to go down, right? And that the probabilities of it going up, I need it to be 70-80%, for example, over the probability of it going down. And then vice versa, right? If it's an analysis where I want to be looking for lower prices, right, I want the probability of it going down to be about 70-80%, right, compared to the probability of it going up. And now those numbers are going to be relative depending on the system that someone uses, their approach, their strategy, whatever you want to call it, right? But again, the three pillars: play the probability. That's what the analysis is providing me. Some sort of a probability of one thing happening over the other. And if I don't have an analysis that has come to the conclusion that one is likely to happen over the other, then I don't have anything to do. There's no button pressing involved then, because the probabilities are not in my favor. So let me change that pillar now. I'm glad I just went through that whole rant there, because I need to change the pillar to play the favorable probabilities, right? And so let me actually type that on here. Let's go ahead and get, you know what I'm saying? Let's do this the right way, right? So let's go ahead and do this the right way. The three pillars is what I want to call it. 3 pillars. All right. Oops. Snow. Oh, and that the 3 pillars. All right. So it's gonna be 1. Play the favorable probabilities. All right. Number 2 is control, right, the risk. So that's I always have a risk disclaimer up, right, because there's risk involved with trading live funds. The only thing I can guarantee is that you will lose money if you decide to play this game or to participate in this business, in this industry, whatever you want to call it, right? The only thing I can guarantee you is that you will lose money. Now that that's out the way, like I said, second pillar is control the risk. That is in our control as analysts, as speculators, as traders. That is 100% within our control. And if we are not sure about the risk, then that means that we probably can't control it, which means that it doesn't fit the criteria within the 3 pillars. So there's nothing to do. Now, moving on to point 3. The last pillar, once the favorable probability has been identified, right, and the risk has been calculated and controlled, right, the next step is, of course, right, an entry into the trade. And once there's an actual trade running, the last pillar, manage the trade, right? And so that's going to be different for different traders, right? Like I know quite a few, and we don't all look at the market the same. Our personalities aren't interested in skinning this cat the same way. So the methods, the methodology, the theories, the concepts, the whatever you want to call it, that some of the other people that I am associated with, right, the things that they use or subscribe to may differ from mine, right, from my approach to doing those things. And so this is very big as far as like we have to have our own experience to truly know what's the best way for us to do so, to have a sustained on a sustained growth in equity curves as we're trying to build wealth, right? So those are 3 pillars, and that is a nice review, I believe, and an outlook for the upcoming week. Now, like I said, I do want to see how the week opens tomorrow evening. It could potentially be another gap. Last week opened up with a gap. The week before that opened up with a gap. So there could be another gap. There's a lot of stuff going on in the world. So I definitely need to see what happens at the open, and then that would obviously give me more information for my analysis. But for now, as it stands, lower prices and indices, higher prices in dollar for the week. Shout out to the believers, shout out to the dreamers, shout out to the homies that inspire me to be better each and every day. I love you, appreciate you more than you ever know. I'll catch you on the next one. Y'all be safe. Peace.